Most people think buying real estate is an actual asset or investment, but if you've ever taken an accounting course, you most likely realize that buying real estate is an actual liability. The reason behind this is because you're actually taking out a loan or mortgage, and this money is going to be something that you have to owe over a 15 or 30-year period. So essentially you owe this money or else you would lose your house. So technically, with accounting terms, buying real estate is not an investment, it's actually a liability. And today in this video, I'm going to talk about the 3 main reasons and why I personally don't invest in real estate and don't recommend people to do it either. So the definition of a liability is something a person or company owes, usually a sum of money. Liabilities are settled over time through the transfer of economic benefits, including money, goods, or services. So you can clearly see in this definition here that owning a mortgage and owning a house is going to be a liability, and essentially your house is going to be producing negative cash flow. Now, not every real estate investment is going to be a liability, and I'm going to talk about 2 different scenarios here. The reason that not every real estate investment is a liability is because sometimes you can cash flow a real estate investment property. So let's take 2 examples. Example number 1, you buy a house and then you live in that house, you owe money for that mortgage for the next 15 or 30 years. Example number 2, you buy an investment property. Maybe it has 2 or 3 bedrooms that you can rent out to somebody, or maybe it's a condo where it's separated and you have 2 parts, and you can essentially cash flow those other bedrooms or other parts of the house to bring in more money than your mortgage. An example is, let's say your mortgage is $2,000 for this house or complex, and you're able to cash flow it to $4,000, $1,000 for each one of the other parts. Now that is going to be an actual investment, and that's going to be an investment that's cash flowing you at least $2,000 a month in profit. So let me go ahead and share another example of a cash flowing property. Let's say you have a 3-bedroom house and your mortgage is $1,000 per month for that 3-bedroom house, and then you can rent out the other 2 bedrooms for $1,000 each, bringing in a total of $3,000. So when you subtract your mortgage, you're profiting or cash flowing $2,000 a month for this property, and that's going to be something that I consider an asset and what most people who are investing in real estate should be looking at. Now, there's going to be unique situations for everything, where sometimes in the United States, or sometimes when interest rates are low, investing in a property can be a good use of your capital, but a lot of times it's not going to be the best use of your capital. So when you're looking at an investment, if you have $100,000 or $50,000 to put down for an upfront payment, don't you want to put that $50,000 that's going to net you the most cash flow or the biggest return on investment? So that's essentially why I think real estate is not always, and in most cases, not a very good investment. Reason number 2 why I don't invest in real estate is it's not a passive investment. Now, whatever your structure is, you're going to be taking care of the apartment or house. You're going to need to be dealing with people, tenants in your property. And on paper, this can sound pretty good. It can be extremely time consuming, and there's going to be a lot of different things that cut into your margin. So let's say with this previous example where you're netting $2,000 in profit, you're going to be in charge of all the maintenance of the property. Anytime something goes wrong, let's say the refrigerator breaks, the washing machine breaks, any of these things could really reduce your margins over a longer period of time. So this is one of the reasons that I don't like investing in real estate, because it requires a lot of time. And normally you don't have the economies of scale to have a dedicated person to resolving all of these time matters. So maybe it makes sense to have a dedicated person managing all of these properties when you have 3 or 4 different properties. But when you just have 1 or 2 properties, you really don't have enough margin or profit to reinvest into somebody managing that individual place. Now, this is why it becomes so time consuming, because you're managing people, you're managing the property, and you're having to take care of all this stuff, where there's other better investments that aren't going to require as much time. And I'll get to some of those investments at the end of this video. So one of the main reasons investing in real estate is so popular in the United States is because of low interest rates and the ease to get mortgages and loans from banks to invest in properties. So a lot of times it's a lot easier to get $100,000, $200,000, upwards to millions of dollars for investing in real estate. But if you're wanting to buy a business or buy an online asset, there would be no sort of financing options for that. So that's the one reason that most people go this route. And I understand completely why they do that. So reason number 3 I don't invest in real estate, and I touched on this earlier, is there's no cash flow. You buy a real estate property and you're living in it, you're not making any money, you're just losing money every month. The way I like to think about it is you're paying 30 years of rent. Now, is that a good investment? In most cases, it's not. Unless you're going to buy an investment property that's going to be cash flowing, that's going to be a much better investment, and that's going to be something that I don't consider a liability, because day one, you can get renters in there, you can get people paying you money, and as long as it's more than your mortgage, you're going to be pulling in a profit, and it's going to be a profitable cash flowing asset. So the reason cash flow is king is because you're going to have consistent monthly income that can supplement your current day job. So let's say you're making $5,000 a month from your day job, you could be potentially renting out that spare bedroom or that second bedroom in your house and earning an extra $2,000 or $3,000 in profit, depending on what area of the world you live in. Now that's going to put you at a much higher use of your time. Now, even though that real estate is going to require some of your time to manage and maintain, it's probably going to be less time consuming if you do that 5K 40 hours per week versus maybe 2 or 3 hours a week of pulling in 2 to 3K on your investment property. So you're really going to need to take an audit of where is going to be the best use of your time. Now, if you're making 5K a month and you're working 40 hours a week, earning an extra $2,000 to $3,000 by maintaining and selling and renting your second bedroom is probably going to be a good use of your time, because for every hour that you're working, you're getting a higher return on that investment. So you really need to figure out what type of situation is going to be best for renting out an extra bedroom or buying another rental property to cash flow and start getting tenants in there. You really need to factor in how much time it's going to take you and how much money you're going to get after all the maintenance fees. And once you factor in that stuff, you can figure out if it's going to be a good investment or not. Now, moving on to the types of investments I actually like to make, and these investments are with online businesses. These businesses are usually 2 to 3 years old. They're already cash flowing from day one, and I'll talk about an example of a deal that I'm doing right now. So this business is valued at around $430,000. It's a recurring cash flow of $7,000 a month in profit. The owner of the business is only spending 2 to 3 hours on the business. We've initially had an accepted offer of $200,000 up front and the remainder of $100,000 paid out over a 20-month period. Now that 20 months is going to be a 0% interest-free loan that is called seller financing. So essentially, we're getting a cash flowing asset making $7,000 a month in profit for $200,000 up front. I see a lot of growth potential in this business where we can easily grow it from $20,000 to $30,000 a month in profit, meaning we're going to get our return on this investment back a lot faster. Now, these are the investments that I personally like investing in, and I understand a lot of people just don't have the knowledge or know-how to buy an online business, to run and operate it, and to grow these businesses. And that's why I have a buyer acquisition program. If you have around $100,000 that you're looking to invest in a cash flowing asset, I'll leave some details below where you can get a free buyer consultation to learn more about buying an online business and if it's going to be a good fit for you. So thanks so much for sticking around. What are your favorite asset investments? Do you own real estate? Do you think it's a good investment? Leave a comment below whether you like it or whether you don't. Ideally, it's good to have a diverse portfolio where you can buy an investment property and you can also buy online businesses. It's good to have both of those in your portfolio, so I do think there's a time and place for each one of those. So make sure you subscribe. I'm putting out new videos every day. Turn on the bell notification icon to get alerted about when these new videos go live, and take care.